NDTV Profit news break confirmed. Zee says it is committed on its merger with Sony. Adds that the article on Sony ending the $10 billion deal is factually incorrect. Markets end near day's low, but broader markets close higher. Nifty Bank falls for the third day in a row to 0.4%. Bajaj Auto's ED Rakesh Sharma lays out the company's electric mobility roadmap, says EV is beyond a buzzword for us. Prime Minister Narendra Modi meets global leaders ahead of 2024 edition of the vibrant Gujarat Summit in Gandhinagar. These include some big names like Suzuki Motors President Toshiro and Mozambique President Philippe Nyusi. Government expected to spend around 4.1 to 4.2 lakh crore rupees on the subsidies, including food, fertilizer and petroleum in FY25. The supplementary demand for grant is now pegged at 4.04 lakh crore rupees in FY2024. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. Before we begin the show, let's take a quick look at how the markets fared during the trade. My colleague Tamanna joins in with the D Street Wrap.
It was a volatile day on D Street today with an opening which was very, very supportive, a big gap up, but markets seemed to lose most of their gains going into closing. The biggest culprit right here, the Bank Nifty down about 0.5% at close. The Nifty and Sensex managing to stay up in the green but giving up most of their gains of the day. 21,500 seems to be the key support for the Nifty and it managed to keep its head above the water. But what actually was happening? Let's take a look at the broader indices, which didn't fare too badly relatively, still held on to their gains, but not as much as we saw through the day. The mid-cap 100, they're mildly up, but the small-cap 100 staying up about 0.5%. Let's pull up the advanced declines just to show you what kind of a day we saw pairing through and where those pain points actually came from. Huge gap as we opened up, but as we got into close, you can see that you literally saw this gap narrowing a fair bit. Remember, it was the Fin Nifty expiry as well, and that's possibly the impact of what you saw in the BFSI space and in those indices. Let's pull up the heat map and see where you had the biggest hits, and you will see it's not just in HDFC Bank, though of course HDFC Bank was on the red, SBI, ICICI Bank, all of them seeing a pain. HDFC Bank about 0.75% down. HDFC Life as well, but that's a completely different reason. You had life insurance data coming in for the year, and year on year HDFC Life had a premium increase of about just 3%. The other segment which is doing weak, has seen weak trade once again is your consumables. So Britannia down about 1%, your Asian Paints, Nestle, all of those counters seeing pain. On the winning side, it was a big day for Bajaj Auto. The first time the stock reacted after the buyback price of 10,000 rupees was out. But even Hero Motor not doing too badly at all, up about 3%. Adani Ports, Adani Enterprises both having a good day. SBI Life, again, because of that insurance data that I was talking about, and good numbers for SBI Life on a yearly basis. Interesting to note what your TCS, Infosys and Wipro are doing ahead of results, and they're holding up strong. So that's a big story. But let's take a look at what's happening in the broader markets as well. And if I were to pick a couple of sectors which did well today, definitely realty would be on top of that list. So Godrej Properties, look at that, just above 3.5% or so. And you saw a last-minute pop coming in from Prestige as well because of Q3 business updates. Their sales are up over 100% year on year, and you'll see that possibly play out tomorrow in trade as well. Let's see where the losers were, and once again you'll see the finance space glaringly obvious over there, whether it's AU Small Finance Bank, oh yes, Polycab and Zee. How can I not talk about Zee? That was the story of the day. After a Bloomberg report said that Sony is going to walk out of the deal, Zee clarified, and that's something we broke first on NDTV Profit, that they are very much still in talk. So it came off its lows at some point, but has closed about 8% down. Polycab has reacted to reports that there's a 200 crore tax evasion case on them. The company has denied it, though. And Vodafone has seen its share of seesaw, some profit booking after going up all through the week. So all in all, stock-specific action over there. A wait-and-watch mode for the markets going into a very data-heavy rest of the week. Thursday and Friday, remember, is when your result season sort of kicks off, and your big tech companies will be first out with the numbers, and that anticipation being baked into trade today.
That was the market wrap for you, and indeed that was a pretty volatile day, but as my colleague rightly mentioned, it was somewhat a win-win day for Bajaj Auto. Now the board of Bajaj Auto has approved a 4,000 crore rupee buyback, but the story of the Pulsar maker goes beyond that, especially in the EV space, where the company is now set to have 3 Chetak electric scooters in the EV lineup, from one which is there at present. ED Rakesh Sharma spoke with us on Bajaj Auto's EV roadmap and why EV is no longer a buzzword for the company.
We are definitely seeing EV as a very, very significant development in the mobility space. It is beyond a buzzword for us. And we have been putting in a lot of effort and capability building in the early phases, both in R&D, manufacturing, supply chain, and in exclusive front-end network. These are very, very EV-specific investments which have been made. Now, whether it becomes, it remains at 5% of two-wheelers or it becomes 30%, and what duration this occurs or unfolds, it's we cannot sort of put a number on it. But we are very sure that this is going to happen. It opens up opportunities for us in the scooter space. We are not in scooters, and most of the EV transition is taking place first in scooters. It opens up international markets for us subsequently. And therefore, when you put all this together, it's a very big opportunity for us. We were, I must confess, maybe perhaps a bit slow on the supply chain side to get sighting on the right costs and availabilities. But once all that has fallen into place, you would have seen that there is a ramp up. We have increased our market share from 4% to 13% in the space of 6 months. And we've got some very ambitious targets going forward. Because right now we feel that the preparation phase is sort of over. The emphasis, I mean, you are always preparing, but the emphasis shifts from preparation to scale up. And that's what the phase we are in. So you will see us trying to push the boundaries further and further. As part of that, we are expanding our product portfolio. We have rejuvenated the Chetak, and now we've added another premium variant to it also. So there are 2 Chetaks in the market, and very soon, in a few months, you will see a 3rd Chetak coming into the market. And there is a full program which extends into the next 3-4 years. Some of it is blue sky thinking, for which we have got international experts working with us who are going to give directions to the new product program. So, it is something which is very, very seriously and furiously underway at Bajaj Auto.
That was the company's ED on the EV lineup and other plans that they have in store. Now let's move on to the big story of the day, the Zee-Sony merger. Now NDTV Profit's news break has been confirmed. Zee Entertainment has clarified that the reports about the Sony group cancelling the proposed merger with its Indian subsidiary are baseless and factually incorrect. We also have Zee Entertainment's chart on our screens for our viewers on how it performed during the markets in the day. My colleague Tamanna joins in with more on this.
The story that we broke on NDTV Profit a couple of hours ago has been confirmed in every sense by this exchange filing. Essentially, what is being communicated is that the conversations are on. And just to add a few more layers for it, the communication that Sony is intending to call off the deal that Bloomberg reported has not been received in any sense by the other party. Good faith negotiations are still on, and that's what we've reported. That's what echoes what Z is coming out and saying. What they're essentially saying is that the conversations are still very much on. They have till the 20th to come to a finality. Nothing is off the table at this point is what we gather. Remember, the contention at the end of the day is about who will lead the merged entity. And while Z and Puneet Goenka are still in that negotiation round where their position is very clear, this is what the shareholders have agreed to. So let's go ahead with this with Puneet Goenka at the helm. It is looking like an obstacle for Sony. Is it a deal breaker where at the end of the day they'll walk away? Well, if they had to, that probably may have happened by now. But look at what has been done so far. Extension has been given for the negotiations. That good faith negotiation period is on. It continues till the 20th. There has been no official response from Sony since the Bloomberg story came out yesterday. And now you have Z officially writing to the exchanges and saying that the article that has been cited, the context to this is that the exchanges have asked Z for a clarification, and they've quoted an article by the economictimes.com that reproduced what the Bloomberg story said, saying that Sony is going to walk away from the deal. So they've called that article and that story completely factually incorrect. You've seen the stock getting hammered, but you're seeing some of those losses being paired right now as far as Z is concerned because of their clarification to the exchanges. And you have to understand the context. It's going to be a tough deal for both of them to walk away from.
That was the big story on Z-Sony merger. Now let's take a look at Uber India. Now the company has posted a revenue growth of 54% year-on-year in FY23. But the interesting bit here is that the numbers are not being driven by rides. Our colleague joins in to explain the key factor that is leading to Uber's revenue growth.
We have our hands on Uber India's financials for FY23. What's very, very interesting is that though revenue has increased about 54%, it has reported a 2,666 crore revenue. The largest revenue head was not its mobility rides. The largest revenue heads was in fact the IT or support services that it provided to its parent company in the US and in Netherlands. So that made up about 1,977 crores of its entire revenue, while rides made up only about 679 crores for the revenue it made. It continued to be a loss-making entity. It posted a loss of about 311 crores. That's comparable to its FY22 loss that was about 200 crores as well. Its expenses have also ballooned to about 3,145 crores from 2,145 crores in FY22. What's also interesting is that the listed entity in the US, Uber Inc., has turned profitable. That has posted about 2 consecutive quarters of profit, but the India entity continues to languish in what is turning out to be a very competitive market for Uber, with Ola, with new challengers like Rapidos Cabs, we have InDrive and now BlueSmart as well.
Indeed, a very interesting update from Uber India. Now, the government spending on major subsidies in fiscal 2025 is being seen somewhat as flattish, according to several economists. Now, this flattish trend is because the commodity prices are expected to stay benign through most of the upcoming fiscal. Our colleague Janani joins in with more on this.
Economists expect that the subsidy bill for the upcoming fiscal year, FY25, will be around 4.1 trillion for major subsidies. Now, major subsidies includes food, fertilizer and fuel, which is more commonly known as the petroleum subsidy. Now, for the current year, they expect that the subsidy bill for the current fiscal year will come up to 4.1 lakh crore, and this will be restricted within that number. Now, if we look back at the budget estimates, the overall subsidies for food, fuel and fertilizer came up to 3.74 lakh crore. Now, including the first additional supplementary demand for grants that came about in December, this came up to 4.04 lakh crore. Now, that is just barely crossing the 4 lakh crore mark. Now, economists expect that in the current fiscal year, which is just 3 more months, this will remain within 4.1, and for the upcoming year, subsidy bill will remain largely similar at 4.1 to 4.2 lakh crore. Now, let's try to understand some of the factors that underpin such an estimate. They expect that the PMGKY, or the free food grain scheme that was discontinued and subsumed with the NFSA Act, would be one of the major items on the subsidy bill. Secondly, the Ujjwala scheme beneficiaries who are getting 300 rupees additional subsidy per cylinder for the 12-month cost, this being factored, will also be an additional subsidy burden. And finally, pent-up, global energy prices, the cooling off of which will be seen in the fertilizer subsidy prices in the upcoming fiscal, are some of the factors that will contribute to the fiscal picture, particularly to the subsidy bill in the upcoming fiscal year. That's all we have for you at the moment.
So indeed, the benign commodity prices may have an impact on subsidies, and that was my colleague on that. It's time for a short break. Stay tuned. We'll be right back. Welcome back. You're watching The Reporter on NDTV Profit. Moving on, my colleague Saloni Kothari had the chance to speak to Kotak Investment Banking's MD and CEO S. Ramesh. Here's a quick look at the slides of the conversation.
I think if you look at the rare mirror window, I think 23 was reasonably better than 22 as far as capital markets was concerned. But when we take an outlook at 24 and a little beyond 24, let's say the early part of 25, I think the outlook seems good both on advisory and ECM. I think on expected lines, we are expecting lots of domestic and international money to be available to invest in new companies. So that will help propel the IPO market with larger deals than what we saw in 2023. the sell down activity is likely to continue in its robustness. And when we are having conversations with corporates and financial sponsors, I think the general deal pipeline looks quite healthy as far as advisory is concerned. So we expect that also to gather momentum over the next 12 to 18 months.
But last year we saw mostly mid-sized deals, in terms of value, that for that matter. But do you see kind of big-sized deals happening in this year and next year as well?
Yes, I would say that 2023 was a bit of an exception when it comes to smaller-sized IPOs that got listed. They were from good companies in general, but they were smaller in size. But when we take a look at 24 and a little beyond 24, at least our pipeline reflects larger companies in terms of market cap. And I therefore expect the float sizes to be much larger than what we saw in 23.
In terms of being an investment banking firm, I'm sure you must have quite a year last year, given the kind of activities and deals that you were involved in. So would you help us understand, from M&A as well as from ECM, how has Kotak performed in terms of the contribution?
I would say that 2023 was a good year, was a good or very good year. I think there were two activities that stood out in the investment banking side. One was IPOs and second was sell downs. I think we had a reasonably good share in both of them. When it comes to M&A, while the actual deal closures have been muted, and there are reasons for that, I think we have used the time to engage with corporates and other relevant people to see how we can build our pipeline, which can be therefore sort of built out over the next 12 to 18 months.
Well, that was the firm's MD and CEO to NDTV Profit. Let's move on. Rapidos Cap service has been in the market for a decent amount of time now. Our colleague spoke to Rapidos co-founder Pavan Guntupalli, who shed light on the startup's cab foray.
Caps, we have launched it a quarter ago, and we have launched it with this value proposition of zero commission, the first of its kind in the country, with just a nominal subscription and zero commission forever for the cab drivers and lowest price guarantee for the customers. We have launched cabs, and as of now we are in all the top 7 cities of the country, and the response has been just phenomenal. In cities like Hyderabad that we started off early on, we are close to 25% of the market share already, and all in all we are doing more than 1.5 lakh rides a day in this category just within a quarter. And a lot of this has been literally organic, right from the drivers. We call our drivers as captains. So currently we are working with more than 2 lakh captains across the 7 cities. And even the customers, there has been just a lot of appreciation because we are giving lowest price with a better service.
That was Rapidos co-founder to our colleague. Ayodhya is one of the most important tourist places, says Mukesh Kumar Meshram, that too ahead of the inauguration of the Ram Temple. Now, while speaking to Pallavi Nahata, he spoke about the UP's focus on tourism. Here's what he had to say.
See, Uttar Pradesh government has already started focusing on tourism in Uttar Pradesh, and we have immense potential as far as tourism in Uttar Pradesh is concerned, and that too particularly faith-based religious and spiritual tourism. Ayodhya being one of the most important destination, and as we know that globally there is significant presence of Hindu followers or Sanatan followers. So obviously everybody is actually aspiring to visit Ayodhya in coming years.
Well, that's all that we have for you on The Reporter. For more news and updates, please keep watching NDTV Profit.